We're going to be looking at the separations section, which is probably where most employers are interested in spending some time. There's some record keeping tips and employer participation. Other requirements that claimants have to meet that could affect their claim eligibility, which ultimately will affect the employer's charging possibly. The work search requirements that claimants have to, that they promise to adhere to. We're going to go over a few areas where we can get help from the employers to reduce improper payments and prevent fraud. And then just a little bit about the SIDE's e-response system. So the way people file for unemployment is they go to the montanaworks.gov claim portal, or they can call the claim center at 444-2545. And they can file at any time for any reason. We call them claimants, and unless they fail to report a separation, the employers will get a notice that they have filed a claim requesting information on the separation itself. So we do depend on the claimant to tell us the truth, but if they don't, you should always let us know if you don't get anything in the mail within within 6 weeks, because you should be notified by then if they did file a claim. And the sooner you can respond and the sooner you can let us know what's going on or help us make sure to look at the responsibility. So if they quit a job, we're going to ask them for proof of whatever they're saying. So they have to show that it was attributable to the employer or the employment, and they have to show, compelling reasons that we would apply to any reasonable person. If this and that and this was happening, was this really attributable to the employer? So in that sense, we still need information from the employer. So you're still going to get the normal, requests, but they're going to have to, we're going to go back to them and say, okay, how did you deal with this? Did you give your employer a chance to correct the problem if there was a problem? Did you talk to somebody before you quit, or did you just walk out? We kind of want them to show us that they tried to keep their job before they quit. And that's the Montana Code Annotated 3951-2302 and the Administrative Rule 2411-457. Those are where we get our requirements. Good thing to have on a quit is a letter of resignation. An email is fine, or a signed exit interview, just something from the employee saying why they're leaving. Record keeping, this is where we would love for, this is a perfect claim, as if we can get these things. Warnings as close to the event as possible, including the consequences. So giving a warning 5 weeks later, everything's not going to be as fresh in your head or even the employee's head. So if you do it right away so that you've got it, all the documentation and all the details correct, then you can just put it in the file and then you'll have it for later. A sequence of events is very helpful because, if it's an ongoing thing and you've been giving them warnings and having discussions and giving them more warnings and having discussions, anything like that, then we know what happened, how you were going through it with them, and how you're trying to keep the employment going if that was a chance of happening. Witness statements are good. Signed and dated witness statements. They need to be right around the same time so that all their details are clear. Trying to get witness statements from people later is harder because they may not even be around. So good payroll records are good because we will ask for that sometimes, or you may use that to prove your what you're saying. So accurate employment dates, that's one of the most important things, is the last day they physically worked. A lot of times we get the last day as the date you took them off the books, or the date, you know, 6 weeks ago, but you kept them employed. We just need that last day they physically worked, because that's when the separation occurred. Again, it says resignation or exit interview when possible. That will be something that we can go to the claimant and say, okay, you said this, but this is what they gave us, and this is what you said when you left. So if they're different, then we can talk to them about it. And with all things, good records will help the charges. Ultimately, if we get good information from the employer, we can make faster decisions and hopefully prevent incorrect charges on your account. The employer participation is vital, because that's where a lot of the detail comes from when dealing with the separations. If we send you a written request, we give an 8-day response time, and it's counted from the day it's mailed out. So that doesn't give a lot of time to have it sitting on the desk, or not dealing with it right away. And we do know that everybody's busy, but it's still 8 days for whatever reason. So because of the mail situation, because it can take 4 days just to get across the state, just as soon as you can get on that, the better, so that it can get back within the time frame. You can always sign up for the side system, which would be almost instantaneous responses, or you can fax it or mail it. If you don't respond, if the employer does not respond, or the response is past the due date, or it's not complete, it's not answering all the questions we had, then we could you could forfeit your interested party rights, which means that you would not be involved in any redeterminations that happen, or any overpayments that we recoup. You would not get those to your account. So it's always important for the employer to respond timely and adequately. And then if you are late, if your response is late for some reason, then if you include that when you request your redetermination, if you include that, then we can make a decision on whether you had good cause for being late with your response. We want to get both sides of the story, and when we have to make a decision based on only one side of the story, it can make the whole decision wrong. So we would like everything to be more accurate, so that we don't allow benefits to somebody that shouldn't be eligible for them. And a lot of times that will happen if the employer doesn't respond, because all we got is the claimant, and the employer, if they don't respond, they haven't proven misconduct. So on discharges, it's so important for the employer to respond.
Hey, Martin, would this be a good time for a couple questions?
Sure.
Okay. I have one here, and it reads, are there specific reasons that UI considers grounds for immediate dismissal, like someone caught stealing, intoxication, self-violation?
Yeah, especially if you have something in your rule, yeah, hopefully you have an employer manual, your rules and stuff, procedures for for the job. And if there are sections that are in there that show what an instantaneous discharge would be, like stealing or, anything that would go to that level. As long as you have that written down in your rules and it's something that the claimant would have read, was supposed to have read, then you can say, this is one of those areas that um, we don't, we don't, we will take the, what am I trying to say? We will make the decision right away. We don't want to keep somebody around that has stolen $5,000 from us, something like that. So anything that will protect you in that kind of situation, if you have that in your rule book, that's a real help to us in making that decision. Some things are more obvious than others, um, but we don't always know everything about the work that you do. So we might not understand the importance of whatever the area is that was violated. So if the more information you can give us, the better.
Great. I appreciate that. Thanks, Margie. Another one that we had was when an employee has asked for time off and the employer has confirmed that they will be able to have that day off, but when the schedule comes out and then they have to work that day and there is no way around it, is that an eligible reason to turn in a 2-week notice and file for UI under a toxic work environment?
I wouldn't think so because the employer has a right to schedule their employees how they need them for their business purposes. So we're always going to go to that fact and say, I understand that you had that week off, but they decided that they needed you and that was a requirement for your job. So if the employee quits, they still have to show they had good cause attributable to the employment. And we're usually going to look at, you know, the fact that the employer, has to run their business. So whatever happens there, if they quit, we're going to look at that. If they get fired for, just walking out or something because they won't work that, then, we'll still look at that because that's important.
Great. Thanks, Margie. There's just 2 comments here, then we could get you to move back on. I had just one comment that says, I have recently received a notice after the response day. They were kind and appreciated it. You can have them sign that they have received the employer handbook and chemical drug use policies for their file.
Yes, a signature that they've read the handbook and a signature that they've seen the drug policy so that you've got that to back you up when they get fired for, being drunk or whatever.
And then we do have one other that if we could get a phone number typed in here, but I think we might have something at the end. And if not, we could get something typed in for a phone number. But that's it for now, Margie. I'll let you get back to your presentation. Sorry for interrupting.
No, that's fine. Once the decision is made, we do the initial determination. That's the first level. If you get a decision a determination in the mail and you disagree with the decision, you have appeal rights. The claimant has appeal rights as well. You have 10 days from the decision date being made. Let's see, the 10 days from the mail date to request the next level of appeal. So the second level is a redetermination. That's where somebody else other than the first examiner will look at the whole file again and give everybody a chance to respond and then make a redetermination decision. If that is, if you want to appeal the redetermination, then it goes to the Office of Administrative Hearings, and that's an over the telephone conference call with the employer, the claimant, and the hearings officer. And the hearings officer will then make a decision. After that level, it goes to the Unemployment Insurance Appeals Board, which is kind of like a group of people that meet once a month and they do it over one day and they listen they have all the hearings in one day, and then they make the decisions on all those. And then they have a new hearing that next month. After that, it goes to the courts. So if it continues to go up and somebody wants to appeal that UIAB hearing decision, then it would just a court. You would have to talk to a lawyer. All evidence that must be presented in the initial levels. You cannot give any kind of new information at the UIAB level, or I don't know about the courts, but UIAB just goes by what's there and by the people giving their statements on the phone. Okay. Any questions about that section? This section is just about other eligibility requirements that the claimants have. And this is not, some of this is pertaining to employers as well, because we will request information to make decisions in these areas, but it's mostly the claimants. So the main thing with unemployment usually is the claimants must be physically and mentally able to work and available for work. And available just means that they have childcare, they have a transportation, some way to get to work. They are available for work during the normal business hours so that they can be scheduled to work. So we look at all those types of things. If they can't work at all, then they're not going to be able to get unemployment. They have to make one employer contact each week for a job. They can make more, but they have to make one contact each week unless they're job or union attached. And job attached is just that they're laid off at the moment because of the season or because of the workload or whatever it is that's causing there to not be any work, but they are going to be bringing them back. You are going to bring them back in a couple months or whatever. They can be job attached, which means they have a guarantee of at least 30 hours of work per week at some point in the close to near future. So like when somebody is laid off in the fall because of the season, they'll be job attached till April 15th or whatever. So that means they don't have to look for work while they're job attached. They have to be available, because if you suddenly have work for them in January and you call them to come to work, they better go, because they've been job attached that whole time. And if that happens, if they turn down work, you need to let us know, because that's not allowed. Suitable work is kind of something that we may contact you about, because suitable work for a claimant is something that they got experience doing. They've got it, the wages are normal for them. They have the physical capability to do the job, and they're willing to work in the location where the work is. So if they quit for that reason, then we're going to explore this, and we may be contacting you about, when they were hired, were they told that they'd have to, travel for work, or were they told that, was it specifically just an in-town job? So suitability is important, because we wouldn't, if they're offered a job from you and it's something where they have to be up and moving around and lifting things and physically capable, they have to be physically capable to do the job. So if they turn down the work because they can't lift whatever the pound is, then we would look at that. School attendance is, we don't necessarily will talk to the employer about it, but it's something that we look at if the claimant's going to school. And they normally have to be available for work while they're going to school. There are some times where they're going to school and they can't be available for 40 hours a week, or they can't be available at all, and they're in some kind of um, curriculum that will get them a better job, improve their employability. In that case, they may be allowed to not look for work and still go to school and get unemployment. In those cases, the employer would not be charged for the unemployment they got. And there's refusing work versus missing work. Refusing work occurs when the claimant's offered work and they say no. And this will happen sometimes when they've been job attached and the employer calls them up and says, okay, we have work for you next week on Monday. And they say, no, I can't. And they give you a reason why. That would be refusing the job. And that needs to be reported to us. They're supposed to report it to us, but the employer can do that as well, because it affects it affects whether they get employment, which affects your charges. So if you do know that they're refusing work, let us know. Missing work means that they're already scheduled to work, but they're going to take time off, or they call in sick, or they leave early, or anything that makes them not work their scheduled hours. Then we look at that and say, that needs to be reported to us as well, because they cannot get a full benefit amount for any week where they work less than their scheduled hours. So we may be contacting you about that. The claimant may not report it, so that's why we ask the employers to do that, because we don't want them to get money, get payments they're not entitled to, because it is hard to get the overpayments back. And, they have to pay penalties, and it can be really expensive for everybody. So the requirement for work searches, if they're not job attached or anything like that, they must submit one job application or resume to a hiring authority. That means they can't just walk into a bar and say, do you have a job, to the bartender, and the bartender says no. That doesn't work. They need to talk to a manager, fill out an application, give them a resume, have an interview. At the very least, talk to the manager, leave a number and phone number so that they can contact the individual if there is work. We do audit these situations, not everyone, because we don't have the manpower to do that, but there is a certain number that are audited every quarter, and we do have other people that audit. So you may hear from us in this situation, which is always helpful if the employer can give us information about this person. So that's why it's always good to get something in writing, or keep a file of the people that have applied, or the dates that you talk to them, so that if we contact you, you can provide that information. There are three overpayments are a huge problem. That's when they don't get paid properly or promptly. And those are two areas that we work on. And so 3 causes of improper payments are when they don't properly apply for work. So in other words, they don't keep track of their employer contacts each week, which we tell them to do, and to hold on to them for several years, 3 years. So that's an area where it causes overpayments. Another area is where they don't report their earnings that they're working while they're on unemployment, because they can work part-time while they're collecting benefits, as long as they're either job attached or looking for a job at the same time. The third area, which is the main area that causes the most overpayments, is failure to report separations. This has happened a lot recently because of the COVID pandemic. People are getting laid off, and they'll put laid off for pandemic reasons, and then that'll just sail on through. And if we don't hear from the employer, that's how it goes in. And so they get unemployment. They can go through the whole claim. They can go into the extension claims. They can go into the pandemic unemployment, and all because they told us they were laid off. So that's why it's so important, especially now with people getting all this money, that the employers report. You know, if you know that somebody's getting unemployment, then let us know that it wasn't a layoff. Any kind of discharge or quit or leave of absence or suspension, anything like that, we need to know about it so that we can properly determine if they're eligible or not. So some of the areas that we some of the areas that we detect and prevent benefit overpayments. We have a section that conducts quarterly wage audits, and then there's another section who audits several paid and denied claims each quarter. We hire someone else that reviews and verifies hours and earnings just on their weekly benefits that they're claiming. We have cross matches that we do with prisons and jails, because it's kind of funny how many people are in prison or jail and they're still filing for unemployment. So we get that cross match and we can make sure they're not filing. State employee payroll records, it's a cross match that runs. Also, the new hire directory is where the new hires, if somebody starts a new job, but they continue to file and request payment, that's a problem. So be sure, I think you have, I don't know what the time frame is for reporting that to the new hire directory, but that's good info to give us. So we really depend on the employers to help us make sure that there's no fraud. So if you're getting information requests from us for any kind of reason, even like the earnings verifications, those can probably take you a long time, and they're probably difficult to, really understand why you have to do that. But if they're leaving early and taking time off and not reporting that to us in the 4 weeks prior to their claim or 4 weeks after they filed, it's an 8-week time limit there. We want to catch that so they're not being paid improperly, and that comes from the employer. If you suspect that there's fraud, there's different phone numbers. There's a form that you can access on the website. There's an email address, fax phone number. Does anybody have any questions about any of that?
Yes, we got a couple. This would be
Okay.
a good time if we could. I do have one person that it's not a really question, but just a statement, which is nice. I have been through the entire appeals process with the phone hearing, and it is seamless. Good job on how they are done. Impressive.
Thank you.
Can a seasonal employee hired to work specifically March 1st through November 31st each year qualify for UI benefits for the 3 months he is off work?
Well, yeah, because if he if he works from March 1st to November 30th, he has a finite amount of time he works. If he makes it all the way through that, works all those months, and then is laid off at the end, it's a layoff. So that would be done as that he'd be allowed because he's been laid off. He finished his job. So then if you decide that you want to get him for next year, You can job attach him, and then he wouldn't have to look for another job. He'd be available for you, hopefully, when time comes.
Thank you. If someone is claiming UI, accepts a job offer, but the job doesn't start for a few weeks, then they receive any other subsequent job offers, is their claimant still eligible for the weeks they marked refused a job offer?
Possibly. We have to look at why they refused it. We look at, whatever the job is that they've been offered, we're going to ask a ton of really detailed questions about the job and about the pay and about the type of work and what kind of experience they've got and why they, decided, said they didn't want the job. The fact that they have another job that's lined up doesn't necessarily mean they can't take this job, at least until that one starts. Anything that will keep them off unemployment is something that we think favorable about.
Great, thank you. This individual had a few employees ask if they can claim UI benefits when they are required to quarantine because of COVID. Is this accurate?
Well, for 2 weeks, there's they can quarantine for 2 weeks. They will be allowed benefits for those 2 weeks. If they're continuing to be quarantined after that, it would, we'd have to look at that. And I don't believe we extended it all because that's in the rule, that's in the law. So at that point, they would probably become ineligible after that 2 weeks.
And then here's one last one. Could you talk a bit about the overpay, repay situation for approved COVID situations early on that were to be processed as PUA and then they went through UI instead?
Everybody had to start off in UI, especially at the beginning when we did not have all the information that we needed to run the program. We were having the computer systems programmed and they weren't ready for a couple weeks after the start of it all. So there was a time frame where we were doing different things with it depending on what we knew at the time. So they had to start on UI. They still have to start on UI because we want to pay them out of UI if we can. And if at that point we find that they're self-employed, we're going to send them over to PUA. If they are not available for work because their kids are out of school and don't have a daycare, because of the pandemic, then they could go over to PUA. Different things will move them over to PUA. Some things stay on UI, but there is constantly a back and forth issue with that because they couldn't set up the PUA claims until the UI claim was taken care of. And we were so swamped at first, and we're still swamped. But so no decisions were being made very timely at all. So that made it harder for them to get going on PUA. We're slowly pulling ourselves out of there, but it's still very, very, very busy.
I can't imagine all the work you folks with UI are doing. So keep it up. You guys are doing great. Thank you. And that was it on the questions. You could go back into your presentation. Thanks, Margie.
Yeah, okay. I just have the sides information here. This is the State Information Data Exchange System. It's a national response over the email that employers are offered, and they can sign up for that at the UIE services website. And it's a convenient way for you to respond to the separation requests, the charge requests, the earnings verifications, and sometimes you'll get additional fact-finding requests from us about the separation. So it's a good place to, it really helps with the a lot of different things, postage, paperwork. I mean, everything on the right side, that's all stuff that helps you and us with the claims, the lower postage, and we don't have to deal with the mail system because that's a nightmare. Paperwork, who likes paperwork? You lose the information on your desk and then it doesn't get in timely. Phone calls, hopefully won't be bugging you as much to ask questions. It'll hopefully, because everything's working in a more seamless way, the tax rate would go down. Less overpayments, staff time takes less. I mean, it's really quick to do it through the side system to give your information through the side system. And then we've got it like right away. If we can, if we were in that situation where we're timely, that's, it's perfect. So, and then if everything's working seamlessly, the appeals would hopefully be better. The decisions would be better, so the appeals would be less. It's all free. It's in a standard format. So each time you've got a separation, it's going to be the same format. There won't be individual questions that somebody's come up with. Hopefully, because it's easier to use, you give quality information and timely responses. Hopefully will help everybody with their productivity, both for you and for us. And the confirmation you would have there that said that we received it. So you would know that it was where it needs to be. The problem is people need to have an email account that they check, maybe daily or a couple times a day so that they can get those requests. I know some employers would sign up for that sides and then they forgot about it, or the person who signed them up for sides no longer works there. So we're sending all of our information requests to that email address and no responses are coming in. So it's always good to use it so that it can help you and us. And this slide goes over the areas that we're using it for. I think they have lots of different ideas for using it, but it started out with the separation information, and then they slowly added the charge information, the earnings verification. You can now request appeals on there, and you can deal with your notices from charging. And this just kind of gives you an overview of how all the different ways that sides can help. You can attach documents to your responses through the side system. You can amend your responses. So if you respond and you send it, you can go in there and send an amended one with the more information that you remember or find, after you had already sent it in, and it's not such a big deal to type out a letter and fax it and all that stuff. So it is helpful in that way as well. It also helps expedite suspicious claims and ID theft, because that is a huge problem right now. There's so many people filing for unemployment, and we just had an onslaught of claims and ID theft. So a lot of times we would send the employer a request through sides and they could get right back to us and say, this guy's working full time, or, this is ID theft, or, the employee or the claimant would call and say, my employer said that somebody filed a claim and I want to fix that, something like that. So it can be helpful in that way as well. And I do know that fax machines are kind of going the way of the VCR and et cetera. They're not going to be used much longer because of the different ways your phones are connecting. They don't all work with fax machines. So fax machines will not always be there. And we're kind of moving away from that so much, which is where sides comes in, because you don't have to fax then, and we can get it all all the information in a timely manner. So these are the phone numbers. If you have employer charging questions, there's a number. If you have a fraud that you want to report, there's a number. That's all I have. Did anybody have any more questions?
Yeah, we had a couple come in. Somebody mentioned that this slide system works great. So yes, kudos.
Good.
Thank you for using that. That thing, technology does help out so much, especially with getting the claims paid and whatnot. People need that help. Question wise, if you have an owner that has to quarantine and he is the one that has to be there to work, to allow employees to work, can they claim UI? The employees receive denied letters prior. They are not able to work since the owner is out, basically.
Yeah, they normally would be, because that would be considered a layoff if the employer can't, the employer can't work, so he closes it up. So nobody else can work, that would be a layoff. I don't know why they've been denied. There's a variety of reasons they could be denied. If they were denied and they shouldn't be, I can just say they need to continue to try to get a hold of us. Phone, fax, email, snail mail. I mean, any way you can get a hold of us. A lot of people will go to job service and have them help, by sending a message, that kind of thing. Access is very difficult right now, but we've hired hundreds of people to answer phones and help us do the work. It's just never going to be probably enough. But if there's a problem and we don't have accurate information probably to make the decision that should be made. So let us know.
And then if you could just back one more page to all that contact information, that'd be great. Somebody asked.
Oops. Okay.
So there's a follow-up question. And the follow-up to the COVID UI benefits, what takes place first? The Family First Coronavirus Response Act that requires certain employers to provide 80 hours of paid sick leave due to COVID reasons, or UI, in this case of quarantine for COVID-19?
Well, a lot of times if they utilize that Family Care Act, they don't need to file for unemployment because they're getting paid through that, the PPP or whatever they call it. So I would say do that first, because that's, if you get the money for that, they don't need to file for unemployment, because they shouldn't be eligible for unemployment because they need to report the earnings that they're getting from the PPP then. And that would just keep them from being eligible right there. So if they're going to be getting PPP, filing unemployment is kind of not really an option.
Great, thank you. And I think we have one last one here, depending on if more come in. How much can an employer reduce someone's salary before the employee can claim UI for the difference?
We look at 20%. So if it's a 20% reduction. So if the claimant quits and they say, they reduce my wages by $5, a month, then we're going to say, well, that's not a big deal. But, if it's going to be 20% or more, we're going to be talking to the employer and trying to verify that. And if we find that it's 20% or more, then they would be allowed to be eligible for benefits.
Awesome. Margie, I think you're off the hook. If some other ones come in, I could always email them to you later, or if you're staying on, I know you're super busy, UI is super busy, so if you get off, that's fine. We could always get them to you, but they have your contact information. It's up on the screen there, and then we put it into the chat as well. We really appreciate you coming on and helping out with the ABC Clinic, Margie. This is been phenomenal. It's been a little bit of a different year. We haven't traveled. We haven't gone anywhere with the clinics. We've done a handful of them virtually. So thank you again, and thank you for taking the time out of your busy day with the UI to help us out.
No problem. Thank you.
We'll give it about 5 minutes. We got Lisa coming up next with the second part of UI, and that's the unemployment insurance contributions. I'm going to put the website back up again for everybody to go to be able to get a handful of materials that Lisa will be sharing. But in the meantime, if you guys wanted to take a quick 5-minute break, use the restroom, grab a cup of Joe, and then we'll come back. Lisa, thank you for joining. Thanks for helping out with the ABC clinic. If you wanted to put your screen up and we could see if everything's working great.
Yeah, it said I couldn't share because somebody else was sharing. So I'll try it again. Okay. Margie out.
Yeah, it looks like Margie stopped sharing.
Okay, so now I should be able to share. Thank you.
I'm out.
Okay.
How are you doing today, Lisa?
Pretty good. Pretty good. Let's see. I think this is going to be the one I'm going to do. Well, if I hit this one and I hit it from here. Okay. Now, are you seeing my screen 1 or screen 2?
Nothing yet.
2. Okay, let me hit this one. Okay.
We are seeing the PowerPoint employment insurance tax.
Okay, cool. And not the one that has the slides on the side. You're seeing my regular one, right?
Yep, correct. We see the full one with no slides.
All right, we're set.
Okay, we'll give it about another couple minutes and then we'll get started if that works.
Yeah, and actually, if you want to put that where to find on that thing, I can take off my share, and so that you can show them where to find those things. Let me do that. Let's see.
Yeah, I put that link into the chat box, and a lot of them just click
I
on
see.
it.
That's where it's at. Okay, cool. I'll
yeah,
leave it
and then they click on it, and then they go down to the tab. I've kind of been explaining at the start of it where to find all that on each day. So
okay, that sounds great.
They should be able to pull that up. And I would recommend everybody to go to that, because yes, we have the PowerPoint, but Lisa has a lot of other great materials that are provided. And if you wanted to be able to pull those up on your own to take notes on them, I'd highly recommend that. And you could find them at that DLI Assistance for Business Clinics page. But yeah, I'll get started here in a second. I'll introduce you and then turn it over to you.
All right, sounds good. Rock and roll.
All right, for the essence of time, we'll get started. There may be a handful of questions tied to this portion of UI as well. So we want to kind of stick to the schedule. We have Lisa Barton up with unemployment tax insurance. Lisa is our current status and rating supervisor for the UI Contributions Bureau. She graduated from the Montana State University as well, with a degree in accounting and a minor in management and business education, and has worked for the state of Montana in several capacities. She has been a field representative a field supervisor, a job service interviewer, as well as a supervisor in the Department of Revenue, and now the UI Contributions Bureau. She's also worked in the private sector as an accountant for a private school and tractor dealership. She enjoys serving Montana employers and solving challenging problems, and has found opportunities to do both in her 28 years with the state of Montana. Lisa, thank you so much again for helping us out with the ABC Clinic. I'll turn it over to you.
All right. Well, welcome everybody. I saw the roster of names and everything, so it's good to see a good attendance. The only thing I don't see is friendly faces or whatever, but safer is better this year, right? So anyway, basically I'm going to give you an overview of unemployment insurance tax and how this works. And already doesn't seem like it's coordinating here. Just a second here. Oops. I've got one screen that's shifting and the other one is not. What's happening, Tanner?
Yeah, I don't know.
Okay, there we go. Okay. All right. So we'll talk about how unemployment insurance works. It's definitely been put to the test this year. This program has paid out over $1 billion to keep our economy going during this pandemic. So it's been put to the test, that's for sure. We'll talk about how to register for unemployment insurance as an employer. We'll talk about how we calculate your unemployment insurance rates. We'll go through what kinds of wages to report and what can be excluded. And we'll talk about independent contractors and corporate officer wage issues as well. Next, we'll move on to how to file reports and amend them. We really encourage people to use e-filing. It's not 100% required, but it certainly is the best way to get your reports filed accurately, on time, and without any problems. And I'll give you a short demonstration of how e-services works for employers. So thank you for giving us your time this afternoon. So how does unemployment insurance help your business? Basically, I tell people, every Wednesday we make a deposit into people's checks, bank accounts. And of course, now it's happening more than just Wednesdays. But basically, by the following week, that money has been spent in the local economy. It's paid their landlord's rent, it's paid for their utilities, it's bought groceries, paid for car repairs, and so forth. So it really is a way that we keep our economy moving when times are really tight. It encourages eligible workers to remain in the area for reemployment. There's a lot of companies that would hate to lose all of their workforce, and by having unemployment insurance that keeps them, paid and in their community, they can come back to work, especially when you have seasonal employment, like construction, that is not going to be a year-round job. And every benefit dollar received in the community turns over 1.6 times. So it definitely has been critical to times like this. Our trust fund balance, we did this. This was our state fiscal year back in June. We were at $237 million. Last year, when we did rates, we were at a record of $393 million. And so we obviously, continued to collect, but with the pandemic, that really dropped. One of the great things, or at least from my perspective, because I'm in charge of rating, is that the CARES Act gave the governor some latitude in how to spend that money to help their businesses, their economy, their government. And what he did was he allocated $200 million so that instead of having your unemployment insurance rates go up next year, we gave him a breakdown of what it would look like, and it might have gone up to Schedule 6 or 7. He put in $200 million, and therefore our rates are going to stay on Schedule 1 this coming year. So you are the first to hear that really good news, that we will be staying at our lowest schedule ever. So thank you to the CARES Act. Number of active employer accounts was at 42,000 back in June. And a very interesting thing about this pandemic is we are actually adding more accounts than we have people going out of business. And part of what's happening is telecommuters. Every single week, we are getting 50 or 60 applications from companies that aren't sending their whole business here, but they do have one employee or sometimes two that are relocating to Montana. So our active number of UI employee accounts has actually grown by almost 2,000. And we've had an 8% increase of in our enrollments. So that's just kind of an interesting thing that's happening with the pandemic. And you obviously, if you're in Bozeman, you know that because your housing prices have gone up, right? So anyway, the employer contributions, what was paid in last year, 113 million. Our benefit payments, this slide was done a few months ago. And as I mentioned, that is now over $1 billion. Now, obviously, we didn't take $1 billion out of this or we'd be in real trouble. The majority of that is coming from the CARES Act, which provided the extra $600 a week supplement. And it also included Pandemic Unemployment Assistance, which is known as PUA. And basically, that is a program that sole proprietors and partnerships and people that are not normally covered by regular unemployment systems, they actually set up a program that even though they had not paid into it, they were able to receive weekly benefits. So that is where that is coming from. Okay. Our unemployment rate, to give a picture, was at 3.5% back in February. It jumped to 7.1 in June. It's now back to about 5.7. And we are now at 8th in the nation for the lowest unemployment rate. So thank you to all of you employers who are keeping people in their jobs as best you can. Our taxable wage base this year is 34,100. These taxable wage bases are established by multiplying our average weekly wage or average annual wage rather by 80%. So that's how we have established the taxable wage base. Okay. Registering for unemployment insurance account. If you're an employer, you need to register for unemployment insurance if your payroll reaches $1,000 in a calendar year, or if you acquire a business that's already subject to unemployment insurance. So if you purchase a business, you don't have to wait until you've paid $1,000 in payroll. You need to get set up right away. If you're an agriculture employer, we have a different standard. It says if you have $20,000 in cash wages in one quarter, or if you have 10 workers on 20 days and 20 different weeks, then you're subject to unemployment insurance. If you have a nanny or a household employer, housekeeper, or someone that you pay $1,000 in wages in a current calendar quarter, then you are also subject to unemployment insurance. And finally, if your business is a corporation and you pay officers and you think, well, that's all I'm paying, I don't have anybody else. No, you still have to pay and report wages for an officer, and that includes yourself. And so you're subject to unemployment. To register for unemployment insurance, use our website, please, at uieservices.mt.gov. And your registration, we tell people that, yes, we can take up to 2 weeks, but honestly, we really get things done with about 2 to 3 days. And you will have an account set up and a rate. If you use e-services to register, you'll also be able to sign in a couple days and you'll see the paperwork that we would be sending in the mail. So if you want to be on top of things, if you're an accountant and you're registering people, please, we encourage you all to use e-services, and you can check, go back and check and get their mail and see the rate and see their account number and any other paperwork that we send out with that. Such as your employment poster saying your job is covered here by UI. Always let us know if you change your address, your phone, or your ownership, because we send out notices, annually or quarterly, depending on if you have benefits, and sometimes you forget if you've moved, of course, to let us know. So we have 3 types of unemployment insurance accounts, and each of these are have a different way of setting the rates and also of reporting the taxes or the taxable wages. If you're an experienced rated business, that's pretty much the majority of our accounts. Those are businesses that are set up for profit. We also have nonprofits, and we have tribal entities that don't elect to be a reimbursable employer. Okay, so basically an experience rated account, their rates can range from 0 to 6.12%. Normally they're going to start out with an industry rate, but that is the full range of their rates. Their administrative fund tax is 0.13 if they have a 0 rate, or if they have a rate above 0, it will be 0.18%. A few years ago, we raised the rate in order to pay for a computer system, and they said, well, we don't want to have any new taxes. So what we did is we reduced the base rates and we increased this rate, so there was no net tax increase to the employers, and that's why we have two administrative fund tax rates. The annual taxable wage base for 2019 was $33,000, and basically after $33,000 are paid to a single employee, no more taxes have to be paid on their wages, and I will show you later how that works. Okay, the rates are effective for the calendar year. The second type of account is the governmental account, and those are for state, county, or local governmental units. Those rates are set in a fiscal year basis beginning July 1st. And so the rates range from 0.26 to 0.86, and they're assessed on the total wages. They have a different calculation to determine their rate, and they will have a 0.09% administrative fund tax. So it's exactly half of what it is for a for-profit employer. However, that tax is assessed on the total wages of the business and not a taxable. There is no taxable wage base like there is for an experience rate employer. Okay. And the rates, as I mentioned, are effective from July 1st to June 30th because they are going by a state fiscal year. Okay. Finally, the last class of employer is a reimbursable account. A reimbursable account it's a little bit risky to do, but it's basically available to nonprofit entities with a 501c3 exemption, tribal or governmental entities. We have only one tribe that does this. We have very few governmental entities that use a reimbursable method of reporting for unemployment insurance. And we have some nonprofits. The way it works is that they will reimburse the trust fund for the amount of all benefit charges charged to their account. And they will pay 0.08% administrative fund tax on their total wages. If you are set up as a reimbursable account, this has kind of been a good and a bad year to do that. The CARES Act actually came through with money to pay 1/2 of your charges. And then the governor decided that with the CARES Act funding that was given to the state government, that they would actually help just as they helped by the experience rate employers by putting $200 million into the trust fund to keep your rates low. They said, well, if I give the reimbursable accounts also some money, that can also help those reimbursable employers as well. Normally, though, this would be in a very tough year because 100% of every dollar that we paid to those claimants, these nonprofits would have had to come up with that money. And of course, this is definitely not a good year for most nonprofits. So the CARES Act really has been a good relief to almost every group of employers that we have because it's going to help keep everybody's rates down and shield you a little bit from the blow of this recession. So if you do want to switch though from a reimbursable account status, you may do that every 2 years. And we try not to have people flip back and forth, but basically if you do it, you have to stay with one method for 2 years at least. If you want to switch though, now is a good time to let us know before December 1st of 2020 that you would like to switch to an experience rated account. Okay, so as I just mentioned earlier, the CARES Act provided for reimbursable if the employer pays their share of the charges. This rule was in place when we wrote this presentation. They've since turned around and given us a little bit more leeway. So what's going to happen is that your 50% of those charges is going to be relieved and paid directly by the CARES Act. You don't have to pay us 100% and then we reimburse you. So we do have some refunds that will be coming out to reimbursable employers as a result of this, because we know that some of you have paid in full the 100%, and now they've changed the rules, so we will be able to give you a refund for those charges. So there's some good news. Okay. So to get the correct rate assigned to your account, that happens at the point of registration. So it's very important that when you register for us, that you give us a description that's accurate. For example, don't just say clothing. Clothing is a little bit vague. It could be a retail store. It could be a manufacturing business. And these two businesses have different rates. Retail sales starts at a 1% rate. A manufacturing company starts at 1.1. If you're too vague and you don't respond to requests for additional information, the non-classified rate would be assigned of 2.40. So please do be specific when you do this. One thing that's been very helpful is that because people are registering online, we're able to assist in finding the correct classification to describe your business, because we have an online search feature that will help you select the proper rate or proper description so that you can get the proper rate. So we just wanted to remind you that correct classification, it's also important for your rating purposes, but the other thing it does is that it helps with the economic analysis that you hear. Whenever you hear about a study saying manufacturing jobs are increasing or decreasing, or this last summer there's been a shrink in the amount of tourist related industries and so forth, all of these classifications and all of the information that we know about comes from the studies that are done with research and analysis, and they use the classifications that are assigned to your business at the point of getting registered. So we actually have a lot of studies that are kind of based off of that. Okay. So new employer rates. A new employer rate ranges, as I mentioned earlier, from 1% to 2.40%. The administrative fund tax is 0.18%. And it's always critical to remember, this is not, even though it says total rate here, that's the total you pay. But in your software, please make sure that you keep these separate. Never put the total rate as your unemployment insurance rate. Always list it. Most of your software is going to have a 1%, a place to enter the 1% as a UI rate, and I'll have a second field for you to enter the administrative fund tax. If you enter the total rate, the AFT plus the UI, you're going to overpay your taxes. So please don't do that. Okay. Industry rates are used until you have 3 full fiscal years of wages. And then we base your rates based on your experience. And so just think about it as a driver, okay? If you're a young driver and you start with a company and they have no experience with you, you have no accidents or whatever, you're just brand new. They're going to give you a new driver rate. And then based on your experience, if you have speeding tickets and accidents and so forth, your rates are going to go up. If you don't, they're going to go down, right? Well, the same thing happens with unemployment insurance, is we give you about 3 years to determine how much you're going to pay in wages and what kind of experience you have with, do you have a lot of layoffs? Do you have a lot of claims filed, or do you not? And if you don't, then basically you'll start to build up a reserve, and that reserve will be used to calculate your rate. However, if you have a negative reserve within the first 3 years, you're going to go straight to the deficit rating system. And I'll be talking to you a little bit more about that later. But what happens is that if you have a deficit rate, then they're not going to wait 3 years before they increase your rates, okay? Your rate notices are sent out in December. And just to let you know, this year we're going to give as much time as we can to our charging department to relieve as many charges as they can, because there's have been obviously a great increase in claims. There's a great deal of work to do to make sure that we don't charge employers who had an employee quit, go to work for somebody else, and now that somebody else laid them off. Even though the last separation might be due to COVID, the fact that they quit when they were working for you also means that you should not be charged, because you you had a job available, they were the one that quit. And so your charges would be relieved. So this year, we're going to need a little bit more time to get that done. We're going to be very diligent to get as many done as we can. We also we will revise rates if there's more work that's relieving that has to be done after December. So we will do our best to make sure your rate is accurate and fair. Okay. Industry rates for 2020. So when you file a registration with us, we're going to put you into one of 10 classes. And the first 9 are very broad, general, but ag, forestry, and fishing, their industry rate is 1.5%. And this is based on the average rate of everybody that's in that classification. Okay. Construction has a rate of 2.40. Finance, real estate, 1%. And as you can see, most of the rest of the employers are at a 1% rate. So that's very good. Okay. If you have a business, though, that did not turn in a full registration or didn't respond when we asked about your classification and so forth, your rate is going to be assigned as the highest one available, which is 2.40. So it's always a good idea to make sure that you have a good registration turned in. Honestly, we really don't have a lot of problem with most Montana employers. People using some payroll services. The payroll services seem to not do a very good job of making sure people get registered. And so the majority of the employers that are getting this non-classified rate are those that have used a payroll service that doesn't send in registrations like they should. So how do we calculate a rate? Okay. If your company, every year what we're going to do is say, as of September 30th, we look back 3 years. And we're going to see if you, first of all, have 3 years of experience. If you have more than 3 years of experience, then you're going to get a regular experience rate instead of an industry rate. So let's take a look. This company, ABC Supply, they paid $404,000 over their time that they'd been in business, minus the number of benefits that have been paid out, and they have a reserve of $107,000. So that's a positive reserve. They're going to get an eligible rate. We divide their reserve by their average taxable wages for the last 3 years, and that gives us the reserve ratio. We take this ratio, we apply it to a chart, which tells us that they're going to get a 1.22 eligible rate. Okay. The next employer doesn't have as good a record. XYZ has 38,000 in contributions, but we've paid out 59,000, so they have a negative reserve of 23,000. They have very low taxable wages, so they have a reserve ratio of 0.85. They're going to have a deficit rate of 612 when we put it up on our chart, and so that's called a deficit rate. Now the last one, we have a penalty rate, and this is something that you really do want to avoid, okay? And to avoid a penalty rate, you need to make sure that your reports and your taxes are paid in full by December when we do the rates, okay? So in this case, they had contributions paid in a 7463. We paid out over $62,000 in benefits, so they have a very large deficit, $54,000. Their average wages are very small, only 31,000. They have a negative reserve ratio of 1.474. So on our chart, it's going to say, yep, that is going to get the highest deficit rate of 612. Now you can see between these two rates, there's still kind of a large difference, but we do have a maximum of 612. We just aren't going to keep increasing somebody's rate infinitum on there, okay? But because they have missed a payroll report, we take the 612 and we multiply it by 1.5, which increases the rate to 9.36. Now, when we send out these rate notices in December, I know this seems like the harshest policy ever, but law ever, and I'm not the one who wrote it and all, but I do try to encourage people to do everything they can to eliminate that penalty. They have 30 days from the time we send out the notice to the time that they have to pay off that any tax due or their missing report or whatever it is that they need to settle up. If they do, we'll automatically reduce the rate back down to 612. Now, the one upside, if there is one with the penalty rate, is if you end up paying this extra money. This is not a penalty where it goes into a fund for penalties. This is money that goes into your reserve. So the additional dollars you're paying in are going to help you in the future because you're going to have a bigger reserve, which is going to improve your rate, and you'll have a better chance for a better rate the following year. Okay. You have any questions on what I've brought up so far? Okay. Send them to the chat, and Tanner, go ahead and interrupt me if you can, okay? So let's take a look at the schedule.
Hey,
Again, it's
sorry,
okay.
I had my headset off.
Oh, okay, that's all right.
Could
All
we
right.
do one question? It looks like we got one.
Oh, okay. Yes, what is it?
Regarding subcontractors, is there a
Mhm.
way to verify that an LLC company has a valid workers' comp exemption certificate in the state of Montana?
Yes, there's a search. It's easy to Google. Just Google ICEC search, and you can put in a business name and you can put in an individual name to see if that person has an independent contractor exemption. And it will let you know if they have a current one and what it's for, okay? And then also, if you want to check to see if somebody has workers' comp insurance, there's also a workers' comp insurance lookup where if you have their federal ID number or their business name, you can check to see if they have a workers' comp policy. So that is a good question and a good policy to do. I encourage accountants, if you have time, I know this is going to be one of the worst years for it, but when you do the 1099s for your clients, that is a good time to, if you have somebody that you think isn't very good at, staying on top of those independent contractors, just to run through and just copy paste those names into that ICEC search and let them know when they come to pick up their 1099s, you know what, sir, you've got about 3 guys here that have been doing carpet laying work or construction for you or a janitor, and they don't have an independent contractor exemption. And it would be a very good idea for you to make sure that you get that done so that if you're audited for workers' comp or unemployment insurance, that you don't end up paying workers' comp premiums or unemployment insurance taxes on these people's 1099, because that's the first thing we do when we do audits is we check your 1099s to see if they have ICECs or work comp policies. Good question.
Awesome. Thank you.
Mhm. Okay, so for the schedule of rates, as I said, we're going to be able to stay on rate schedule 1 this coming year. And so our rates are going to go from 0 up to 612. So would be nice if workers' comp was this cheap. So I think we're in a very good situation here. Okay. So we'll talk about a little bit about rate transfers. Okay. Another way you can save money, and again, if you're a CPA or helping somebody get set up and they're buying a business from somebody else, it's a good idea to maybe see what the predecessor rate was, and maybe it's a good idea to pick up their reserve. Okay. The way it works is that if a company, we do mandatory transfers of experience if the company has common ownership, management, or control. So if somebody changes their business organization from a sole proprietorship to a corporation, then we will automatically transfer all the the experience. And what that means is everything you've paid in minus what you've paid out, your whole reserve, your experience, all of that is going to transfer to your new UI account. You have a new federal ID number, you have a new UI account, but we're going to transfer all the experience, which is usually a good thing because most people have positive reserves and you don't want to lose the $10,000 you've paid in especially if you had no claims, right? So in the case of a purchase of a business, if you're setting up an account for somebody who bought a business from somebody else, we will usually notify you if we happen to notice on your registration that you said you purchased the business from somebody else. Well, we'll look up and we'll say, well, how is that person's rate? If it's a positive reserve, we will go ahead and tell you, hey, this person has a rate of 0.42. Your beginning rate is going to be a 1% rate. If they're agreeable, and if somebody's selling their business, there's no reason they would need to keep their account or anything. Basically, if you sign and the prior owner agrees and they sign, then we will go ahead and transfer the rate and the experience. The critical part is you have to do this within 90 days of when you purchase the business. So if you buy the business and then you wait until April or May to set up your payroll accounts, it will be too late. Okay. The other condition we have is that the predecessor has to have their account paid up and any reports filed and paid as well. And then of course, both people have to sign the form. Okay. One of the things that happens if you purchase this business in the middle of the year, that employer will have filed 2 quarterly payroll reports. And now you're going to file the next 2 quarterly reports for the third and the fourth quarter. What happens is that you're actually able to save even more money because we're going to calculate excess using the wages the predecessor paid. If you use e-services to do that, we're going to recalculate your excess correctly, and that will save you even more money. Okay. Most people don't say when they buy a business, well, could you show me your payroll reports? Of course not. So if you use e-services, we will actually do that calculation for you, and that will save you overpaying your taxes. Okay. So what should be reported as wages? If you're, the obvious, of course, are wages, commissions, bonuses, in-kind payments, things given in lieu of wages. If you are a farmer, we have some farms that say, okay, I'm going to pay them with grain, or I'm going to pay them with cows or something like that. Well, the thing is the value of that grain or the value of the cows and so forth has to be accounted as wages because that was given in exchange for their work. Vacation, sick pay, retirement payouts, all of those, of course, are reportable, and they're reportable when paid. If you had back pay, a lot of employers sign up for PPP, and 3 weeks or 4 weeks after they had laid everybody off, they got a check. They said, oops, you're supposed to go pay all your employees for their lost wages. And so they write a check in April for maybe those 2 or 3 weeks in March. So don't adjust your payroll reports for March. You always report wages to us when paid. Okay. Fair value of room and board is reportable. Tips, if you're a restaurant, if those tips are reported to you, you are also to include those in the wages reported to unemployment insurance. In Montana, for Department of Revenue, tips reported by employees in restaurants are not reportable as wages, but they are reportable for unemployment. With unemployment, we're trying to replace the wages that the person was earning when they worked for you. Obviously, most restaurants, it's almost 50-50 or more percent of their wages are in form of tips. So when they lose their job working at a restaurant, they didn't lose just, $7.25 or $8 an hour, if that was what they were paying. They lost the tips plus that $8 an hour. And so that's why it's reportable for unemployment. For 401k and flex plans, the employee contributions to those are not supposed to reduce what's reported to Montana. The state of Montana for withholding tax, that's fine. That does reduce what's reportable for them. But for unemployment insurance, it's the total gross wages, which means that you cannot reduce it by the employee contributions for 401ks or flex plans. Okay. Non-taxable payments. If the employer is contributing to the 401k, that is not considered reportable. If they have retirement plans that they contribute to, that is not reportable to us. Health insurance and life insurance is not reportable. No additional cost service. With business expenses, we ask that basically you have receipts for your expenses. If you have non-receipted expenses like meals and so forth, we do allow up to $55 a day, which matches basically whatever the federal rates are. Federal rates do have some high cost cities like you have over in Sydney or, Bozeman, Big Sky and so forth. So we will use whatever the feds allow for the meals on those. The mileage rate was 0.57 cents a mile. And one thing I just want to let you know too is that if you have an employee who says, I'll use my pickup, why don't you just rent my pickup for $200 a month and I don't want to bother with the mileage reports and all that. And you go, oh, that sounds good. Okay. That's not allowed, unfortunately, with unemployment insurance. So if you were audited for workers' comp or unemployment, we turn around and say, I'm really sorry, but because you don't have receipts, because you don't have mileage reports, all of that $200 has to be added to wages. So you do have to maintain mileage and expense reports and so forth. Okay. Now, here's another group of employees that are reportable or not reportable for us. And I saw in the last session, somebody brought up the fact about PUA claims that they found out they should have been reporting as UI claims and so forth. And I've been dealing with some of that, so we'll talk about it here too. Okay. If you have an LLC and you file a Schedule C as a sole proprietorship, or you file as a partnership, you have other members and so forth, you do not report wages to unemployment insurance for the sole proprietor or the partner or the members filing as that. Okay. However, if your LLC files as a S corporation or it's held by a holding company that's a C corporation, you do have to report wages. And so you cannot simply take distributions from an S corporation and say, I don't want to have any wages. I don't want to report Social Security. I don't want to, whatever. Okay. The IRS, as well as Department of Revenue and Unemployment Insurance, we do require that S corporations and C corporations or LLCs that file as that report reasonable wages for corporate officers. And I'll go into a little bit more detail later. If you have a spouse of a dependent of a sole proprietor, okay, they are not reportable for unemployment insurance. So you may have somebody that's set up on withholding taxes, they work for their husband, but they should not be reported to unemployment insurance, even if you write a W-2 for them. I kind of joke sometimes. I said, we don't want to get involved in arguments over why you fired your wife or vice versa, why she fired you. So that's why we exempt ourselves with the spouses. Dependents of the sole proprietor, that doesn't mean that if they're dependent on your tax return, they are not reportable for unemployment insurance. Okay. So if you've made a mistake and you've included a spouse or somebody else that's not reportable, we can go back 5 years to refund your money. So if you'd like to make those amendments, go to e-services, file the amended reports and indicate that this is a spouse wages for sole proprietor should not have been reported, and we will give you credit or send you a refund, whichever you like. Okay. If the company is set up as a corporate officer, then they must report the spouse, because the spouse is actually in a corporate entity, is not a spouse of the corporate entity. There's, so basically the corporate entity is separate than the officer, and therefore they're not recognized as the spouse of a corporation, obviously. So they should have their wages reported. Okay. And as I said, corporate officer wages must be reported. We have two administrative rules that talk about that. One is the one that says that if you have corporate officer who have taken distributions in lieu of a reasonable wage, then we can reclassify their distributions as wages. If you have, then we have the second rule that goes into more depth, and that's one of the handouts that was on the website Tanner mentioned. That basically goes into the fact that what are the things that we look at? Okay, so if we audit a business and they've been taking, you know, $50,000 in distributions over the year, and they reported, $5,000 for their wages. And we say, okay, so tell us about how many hours a year that you put into your business. Well, I work full time. Okay, well, that's about 2,000 hours a year. So I take what they're reporting, 5,000, 6,000, whatever, and say, do you think you're really worth $3 an hour or 6 or whatever? And of course they're not. What we do is then we're going to say, okay, out of the 50,000, I can allocate some of that as profit, but first we have to talk about what's reasonable for you. So to have something objective to use, we use the wage rates by occupation studies. Okay. And the way this works is that our research and analysis group sends out surveys to employers every year. They review the reports that we receive from employers as well to determine what is an average wage. And it's not even just Montana as a whole. They break this down by regions, so that if you wanted to say, well, what are the wages being paid to plumbers in Montana? They'll have a general number as well as the broken down by region as to how much they're paying their plumbers and so forth. So this is a nice objective guide. And if you're an accountant, I really urge you to download this or bookmark it on your computer. It makes something easy that you can point to say, okay, you own a construction company. What should you be reporting, out of the distributions you're taking? What should you report as a reasonable wage? Okay. The independent contractors, somebody had brought that up earlier. And independent contractors in Montana, if you operate away from a fixed place of business, you need to have an independent contractor exemption certificate. The way this works is that when we do audits, or if workers' comp does audits, or if somebody gets hurt on a job, there's the question of, well, should he be covered by workers' comp, or should he be covered by unemployment insurance, and so forth. And by having a certificate, it kind of makes a bright line. It says this person has showed us that they have an independently established business. They have a business license, their tools, they advertise, they have a business banking account and so forth. And so we would like to say that they're an independent contractor. We'll give you a certificate. They have to renew that every 2 years. They provide more proof and so forth every 2 years to show that they're still working as an independent contractor. And then what it does is that certificate says that you, as the person that wants to employ this janitor, or maybe somebody do some repairs at your business or whatever, you're going to be protected so that they cannot file a workers' comp claim and they cannot file an unemployment insurance claim for the work that they did for you. So this is very valid, very important to make sure that the people that are working for you as subcontractors have this exemption before they go to work for you. I done an audit one time in Eastern Montana, and the first thing I did when I came there is the lady says, I want you to look over my IC exemptions. I'm like, okay, I get to them. Yes, but I want to make sure that you do. I was like, well, why? What happened? And she said, well, we had a few years ago somebody that they came, they had a drywall crew, and they said everybody on this drywall crew is an independent contractor, which was a little sketchy there. But anyway, and of all the people they looked, they had exemptions. The only one that falls down and hurts themselves off those stilts and all is the one whose exemption expired in the middle of the job. And so they went to court, and the guy says, well, I want to be an employee. I want my bills paid for under workers' comp. And so there's an unemployed insurers fund. And if the person is determined that they should have been reported because they didn't have their exemption current, then they have to go to, okay, who's next in line for liability? Since the head of the drywall crew did not have a workers' comp policy, the liability jumped up to them, and they ended up being responsible for the claim. Their company canceled their policy, and they ended up having to go to the state fund. So I really had a lot of sympathy for what they had gone through, and all, because, you know, they really did try to do a lot, but they missed the fact that this one guy's exemption was expiring, and unfortunately, he was the one that got hurt. So this will save you a lot of money. It is worth it to take the time, like I say, as accountants and so forth, to alert people to the fact that they're hiring subcontractors that don't have current exemptions. I've seen this when I've done audits of carpet companies and so forth. They have their carpet layers, and they've got 50 guys on there, and 4 or 5 of them don't have exemptions, and bam, you know, they're going to all once be responsible for taxes on some of those earnings and so forth. So it is a bright line, but it also means that you have to be very alert and make sure that any subcontractors you have do have this exemption. Okay, is there a question I see?
We do have a
Okay.
question on the question.
Okay.
and
Okay.
Is the amount above 50,000 in long-term life insurance that we include on W-2s
Mm-hmm.
as taxable for withholding, taxable for UI?
No, it is not. We don't have an upper limit for that. And so it is not covered. It is not reportable to UI. Okay.
Great, thank you.
Mhm.
And that was it.
Okay. All right. So we'll look at multi-state workers. Every once in a while, we have companies that have people who work in more than one state. Sometimes they have more than one base of operations. So they might have the question of where should we report these workers? So there's a chart in the employer handbook that's actually easier to take yourself through the questions. But basically the first question we'll ask is, well, where are the majority of services performed? Pick the state where the services are localized. So, and then if the majority of the services are performed in one state and the work that they do in Montana is just brief, 2 weeks here and then they're back to North Dakota, then it's fine to have that person's wages reported to North Dakota for all of it. Okay. If they're not localized and it's like, well, we're going to be here for 7 or 8 months, I don't know, it could be longer and so forth, then we're going to take a look and say, okay, then where is the base of operations? All right. If the base of operations are in North Dakota and you have people like a pipeline company, for example, where they keep changing, where they're going to be, then basically we would look at the base of operations. And if we can't find a physical base of operations, then we look at where's the state where they direct and control services. And finally, if none of the above questions fit, then we look at are the services performed in their state of residence? This last one is the one we almost never use, okay? We do have some out-of-state companies that kind of default to that, and that is not the proper way to report. The majority of the time, when you have people that report wages for workers that work in multiple states, they actually are able to solve that by going to question number 1. Where's the majority of the services performed? And then second, they'll look at their base of operations, or sometimes, in the case of construction, they'll set up a temporary base of operations to control and direct their work, and that'll be in Montana. Okay. If you have questions about where you should report it, give us a call and we will walk to your personal situation and give you the answer. Okay. Excess wages, this is one of our most common mistakes, even if we're using computers. And as much as I love QuickBooks and all, I do have to just kind of caution you that if you use QuickBooks, be aware that there is a bug that sometimes it will not get the excess wages correct. Sometimes it's because there's a bonus. Sometimes it happens if you void a check. Sometimes it happens if you um, add a new payroll item and maybe you didn't click the box correctly. But we are finding that it's not as reliable as it used to be. So double check your reports if you're using QuickBooks. I just encourage people, please make the switch to e-services to report your wages and we'll have fewer of those errors to deal with. Okay, so here's how excess wages are calculated. On the first quarter, here's an example of somebody who's making $42,000 a year, okay, or 56,000 a year. Sorry, we updated our examples. So anyway, in the first quarter, they've made 14,000. Our wage base is 34,100. So they haven't exceeded that. Their taxable wages are 14. Second quarter, their year-to-date wages are 28,000. They're still less than 34. So yes, the answer is 0 excess wages. Their taxable wages are 14. In the third quarter, now they're up to 42,000. If you take 42,000, subtract the wage base, that equals $7,900. So therefore, on the quarterly payroll report, you're going to put $14,000. $7,900 will be excess. The taxable wages for that employee are $6,100. Now in the fourth quarter, they're going to have $14,000 of wages. They're already over the wage base, so they have $14,000 in excess wages, and you don't have to pay taxes on anything. All of the wages for that employee are excess wages, and you have 0 to pay taxes on. Okay. Like I said, most of you are depending on your computer to do those calculations for you. I just do want to put the caution out there to double check the calculations once in a while, and please use e-services if you find that your software is not coming up with the correct answer. Okay. So e-file requirements. This is where we'll finish off. Unemployment insurance requires now that if you have 20 or more employees in a single quarter in a year, or if you're a CPA or a third-party agent, you need to be e-filing all quarterly reports. They can pay online, but they need to be e-filed reports, okay? You have options. You can e-file with using e-services. You can e-file with QuickBooks Enhanced Payroll Service, or you can even export from the payroll reports on QuickBooks and upload for e-services. If you have other software that does an ISESA or an FSET format, you can bulk file. And our handbook basically will give you more information about what are the requirements for those two. Basically, 87% of Montana employers have fewer than 10 employees. So e-services is really the most accurate answer because we still have an error rate of almost 15%, even with e-filed reports. Your gross wages may be right, but we still have errors coming through, whether it's QuickBooks or payroll services. They do have errors in their software calculations when it comes to excess. The other thing that's the majority of the mistakes that come are because people are using the wrong rate. They're not updating their software every year when they get their rate notices, and so they overpay. And just give you a picture of it. The first year I was a supervisor, I had to personally review and approve over 5,000 refunds to employers. And that was because of the high number of overpayments that we have because of excess errors. So e-filing is not always equal. The most accurate method is still e-services. And the other methods are nice in that, yes, we save time on entering the payroll reports, but it's definitely not as accurate because we still have to make a lot of corrections for overpayments and underpayments and excess errors. Okay. So before you report, I know I'm beating a dead horse here, but basically, please double check your rates. And the payroll software companies are not going to automatically update your rates. We do offer a free service to them to give us a list of their clients, and we will give them the rates. They still don't seem to get all of those accurately entered. So if you're using a payroll service, please make sure that you forward the rate that you get, the rate notice, and double check your reports to make sure you're not underpaying and overpaying. It really hurts me to see times when I'm issuing like the third or the second or third or the fourth refund check of the year to somebody when they're not reading the notice and they're not paying attention to say, please update your rates. The other thing that hurts is that the penalty rate system, where if you underpay, all those employers who underpay because of wrong rates, every year there's a certain group of them that are going to get a higher rate in the following year because their software was underpaying their taxes. So please make sure that you try to get those rates right. Okay. So to sign up for e-services, you can go to our website to sign up. You just need your federal ID number and information from your last quarterly report. And I'll give you a quick little demonstration here, okay? To file now, the next step, you'll tell it that you had wages to pay. You'll file a report with wages. It asks to fill in the employer accounts. These turn red until you fill in the wages. Down below, we have a button here, load previous quarter Social Security numbers. That will let you, I'm sorry, I have to catch up here. That will let you bring in the wages from your last payroll report. You're able to delete a row, add a new employee, fill in their wages. And once it's done, you're going to hit submit. Each time you do that, you're going to also have a secret answer, and then it will print the report for you. It'll provide a PDF report. You can save it to your records and you're ready to go. Okay. Took about 35 seconds. I know that was kind of a swift demo on there, but it is very easy. Okay. Now to make a payment, basically,
Lisa?
Yep.
We had somebody ask that if you could go
Sure.
back
Yeah, I
a
can.
slide. I don't know. I don't
Yep.
know which slide it was exactly though.
Okay, was it the slide on the report? Was it this slide? Go ahead and answer.
Yeah, if we could get
Okay.
that individual to respond in the chat if that was it, or if
Okay.
we had to go back.
Okay.
I'm guessing it was because it
Okay.
came in at 358.
Okay, that sounds good. I'll do it. So here we go again. This is what e-services look like. Up in the top here, it has the employer handbook. You can click on that to see it. You can read our quarterly newsletters for any updates or changes to the law. Just like you saw it on paper, it's good to see that. So it has your federal ID number. If you're an accountant, it has a place for your account, and all of your customers can be listed under here. You only need one sign-in to use e-services now if you're a CPA. Okay. If you're an employer, you're only going to have this tab, of course, for your account. Okay. So to get started, you click on the account number. All right. And this is going to how you file the report. Okay. So it's going to click the account number and say file now. We'll file a report with wages. We'll fill in how many employees we had. Then down below, it's got a load previous quarter's Social Security numbers. Okay. When you click that, it brings in the Social Security numbers and the names of the employees that you had. Okay. I apologize for the speed on this demonstration because first time we did it, somebody says, I don't want any demo that's longer than a minute. I'm like, whoa. So anyway, so once you've added the wages, you'll hit submit and it'll give you the report to print. Okay. And there you are. Okay.
So Lisa, sorry, it was the slide before that one that you started on. I apologize.
Okay. All right, here we go. And the minimum wage for reporting, if wages are $200, are they reportable? The answer is yes. Basically, there was a rule years and years ago. It said if you have less than $50 in a quarter, then maybe that would not be reportable. That would be considered casual labor. Okay, so let me go back 2 slides. All right. Okay, this slide is the one that was 2 slides ago. Okay. Oops. Got my other side is showing it, but not this one is. Okay, there you go. So on this side, basically what I was saying is the perfect time to sign up for e-services is that it's easy to use. It does have your employee names and your social security numbers on that button that I showed you. So it has their full name, social security numbers. All you do is enter the gross wage amount. You can eliminate some mistakes. As I mentioned, you'll get the excess right and the taxes will always be correct. If you have credits on account, we actually have over 2,000 accounts that have credits that basically if you use e-service, it will apply that existing credit to any of your tax payments. If your system is able to upload export wages, they can be uploaded to e-services as well using our upload feature. Okay. The reports are super easy to amend. I'll show you how to do that in a minute. And your email reminders, if you're a person that says, hey, I've got a lot of other stuff on my mind, but I don't want to be late, we can actually set up an email reminder. If you want it early in the month or if you want it a week before the deadline, we will send you a reminder on your schedule that you'd like. Okay. And third-party agents and tax preparers, even if you're using QuickBooks to e-file your reports or ICESA to e-file reports, please sign up for e-services so that you can do your amended reports through e-services and give us the reasons for updates or corrections on reports. It makes it super easy. If you have clients that come from other accounting firms and so forth, this makes it handy because you've got all their history that's available to you. So, and especially because the most important thing is every year you'll have everybody's rates and you'll never have to go chase a rate notice again from one of your clients. And I know that some of you people are probably nodding your head because I know that that's one of the little hassles sometimes of being a CPA is chasing down rate notices. With e-services, you'll never do that again. Okay. Okay, let me move forward. So we'll talk about how to amend a report here, okay? So to amend a report, you're going to come into the account and you're going to click on the account that you have, and then you're going to choose which report you want to fix, okay? In this case, we're going to fix the third quarter here. And on this line, it's been updated since to say it now says view/amend, okay? So you click on the report to amend, click on change, and select the reason for your correction. We're going to remove an employee who was a J-1 visa worker. So down below, we're going to change the number of workers that they had reported, and we're going to delete his wages and hit submit. That was simple. It recalculates the tax for you automatically, and of course, it'll give you an amended report, and it shows you that this is pending. And you'll see that you have a credit now as a result of your amendment that's also pending of $94.80. Every amendment is reviewed before we approve it, just in case somebody misinterprets the law or whatever and so forth. But it's so much easier, nicer to have e-services because now accountants are able to give us an explanation for their changes rather than making us give you a call back and check what the reason is and confirm that with you. Okay. So let's go on to the next one. Oops. Okay, so for customer support, basically our e-services support is option 2 at our general number. So at 444-3834, option 2 will give you e-services support. The other thing you can do is you can send a message to us with a question and please ask for help with. Sometimes you might want to ask for help with sides, or maybe you might have a question about, could you please add somebody or maybe remove somebody with access? go ahead and send us a message through e-services and we respond within the next day. Okay. The last thing I'm going to bring up is fraud. I know they brought this up a little bit with the claim section, so I won't delve into it as much, but we can save you money if you let us know about the fraud. Nobody could have pictured in March the amount of identity theft that they were just waiting to use. We figured that, those Experian data breaches, the information that's available on the dark web, it's been pretty irritating to know that there's so many legitimate claims that you want to get through and work and take care of that are being slowed down because of all the fraud. And so, as the previous presenter said, please sign up for e-services and sides, because when you sign up for sides, boom, that day you're going to get an email when they file that claim. The next day you're going to get an email saying a claim was filed. And somebody's like, that employee is sitting out in the front office here. Now, gee whiz, did they file a claim? So they talk to the person, no, I sure didn't. And they contact us. And so sides has just been super invaluable to cutting off these claims before they get anything out there. Paper takes too long. And I hate to say it, with the slowdowns, in our mail service and everything like that, is that, if it takes 9 days to get to Sydney, that's almost 4 days too late for us to stop the first payment. So we really are putting in some new things though now to require that these people show us more proof of their identity. It's called ID Me, where I'm not going to get into all the specifics about how it works, but it is going to do a heck of a lot to prevent claimants from filing ID theft. Now, what it also means is that people filing regular claims are also going to be slowed down a little bit too. But it's in the name of trying to save our trust fund and save our employers money, because it's just the right thing to do. However, you also have potential fraud if they're receiving benefits because they refuse to return to work when offered. Or if you offered a full-time job to somebody who didn't work for you, before the shutdown and so forth, that is also receiving unemployment benefits and they turn it down. So you can let us know that. And there's 3 ways to report fraud. If you have an e-services account, we have a special link built in, which will take you there to report claimant fraud, UI fraud, that's committed by an employer. Maybe an employer is in on the deal, or any PUA fraud. You can call the investigators directly, you can fax, or you can email us, but don't include the social security numbers in emails, of course. The last thing we need to do is have more social security numbers out there in the web, right? So please sign up for full access to e-services and use your last UI report. It's going to ask you for your federal ID number, your UI account, and the gross wages, because we want to make sure that the people signing up for e-services access are also authorized to do that. So you can manage your claims and eliminate late responses to charges, which also raise your rate. So let's fight fraud together, guys. Last thing I have to say is we are in this together. It's been a crazy year, I know. We've had $1 billion of claims. That's a lot of work that we've had to go through, but the employers have had to do it too. You've had to answer all of those responses and those notices. So I just thank you for what this has been like for you. And I just want to assure you, you have my sympathy. I know people have been very resilient as much as they can be, but our website also has some helpful things that might help you out in dealing with this new environment about workplace safety and COVID. We have guidelines for reopening businesses. There are grants and loans that are still a little bit available. And so we just encourage you to use our website, contact your job service as well as us if you have any questions about any resources that are available to you. So I just want to thank you. Apologize for going over by 11 minutes here. So anyway, do you have any more questions for me, Tanner?
Thank you so much, Lisa. No worries about going over. We kind of started a little bit late, so that was my deal. But thank you. You did awesome. We had one last question. What
Okay.
is the minimum wage for reporting? If wages are $200, are they reportable?
Okay. So the way it works is that if somebody, the minimum wage to report, it depends on the employer's total wages to all employees. So let's say you're an employer and you actually only had, and a sole proprietor, not a corporate officer, and you only had $200 of wages to somebody all year long. Okay. For unemployment insurance, you're not subject. Okay. For Department of Revenue and for withholding purposes and so forth, they actually do need to report and take out Social Security and the rest of it. But for unemployment insurance, you're not subject to us. But it goes on your total wages paid to all employees, not on a per person basis. I know that once in a while people are like, well, I heard $600. Well, no, $600 is the minimum before you issue a 1099. And that's if the person is a independent contractor, legitimately. But otherwise, $200 by itself, you don't need a UI account if that's the only person you paid and that's the total for that whole year. Okay. Also, if your account was set up and you're over $1,000 and so forth, but then for some reason you basically don't need anybody else. If you have 2 years in a row where you've dropped under $1,000, you actually can drop your UI account as well. Okay. Any follow-up
Perfect.
on that one? Okay.
No, that looks
Okay.
like we
Yeah.
got it.
Okay, cool. Well,
Lisa,
thank you,
thank you.
everyone. Appreciate it. Okay, go
Yeah,
ahead.
thank you so much, Lisa. That was phenomenal. And thank you for taking the time out of your busy day with UI. You've been doing an awesome job with UI. I can't imagine what it's like working there right now. So keep it up. Thanks for taking an hour out of your day to help us out with the ABC Clinic.
All right, thank you. Bye.
Great. Well, that wraps it up for today, everyone. Thank you so much for participating. We do have our last day tomorrow. We have a couple topics. The first will be wage and hour independent contractor. Vocational rehabilitation will be next, and then the Montana Registered Apprenticeship Program. We'll be starting at 2 o'clock. We'll be ending roughly around 4 o'clock as well. I'll be on for a little bit longer if there's any questions that do come in, but thank you again. Have a good rest of your evening.